Hey guys, and welcome back to the ASX Investor channel. Well, we made it through September. We know September is a seasonally weaker month, and unfortunately the ASX flagship index has lost its 11-month winning streak. However, what a past period it was. On reflection, it was an incredible period of growth catalysed by Biden's election win, and of course on the back of the strength of the economic recovery, both at home in Australia, as well as on markets around the world. But here we are in October. Welcome. It's a new month and it's time for us to explore 3 exciting ASX growth stocks to look forward to in the month of October up ahead. Sayona Mining, Imugene, and Z1P. They're 3 individual companies playing across unique sectors. Each of them have had significant past periods in the month of September with news flow and announcements that have set them up to be fascinating prospects for this month up ahead. If you do enjoy the video, don't forget to give it a thumbs up. Feel free to share it out as well. A reminder that I'm not a financial advisor. Nothing we discuss on the channel is financial advice. These companies are not buy recommendations. They're just interesting companies for us to reflect on, to think about the past news flow over the month of September. A reminder, we make daily videos, so if you haven't yet, make sure you've subscribed, turn your bell notifications on as well, so you won't miss any of our daily episodes, and you'll be updated every time we drop a new video. Kickstarting with stock number 1, Sayona Mining. ASX SYA has had a phenomenal past period. They've experienced significant uplift on the back of the tailwinds surrounding not only the lithium sector, but the broader EV battery material supply chain. ASX SYA has now achieved unicorn status with its market cap surpassing the $1 billion mark, and there's been a range of significant announcements over this past period. Of course, we know that their core location is centered around a hub that they're developing surrounding their Fortier lithium project. And now they've recently completed the acquisition of North American Lithium as well. However, there's been a recent capital raise and a discussion about the Moblum project that ASX SYA is starting to acquire. And this, of course, has garnered even more excitement about the Sayona prospects moving forward. Before exploring the news flow, it makes sense for us to take a step back and also have a think about why Quebec is such an ideal location, not only for Sayona Mining, but for the broader EV battery supply chain. So Quebec has got an accommodative government. At the top of their strategic priorities is developing a green hub to really help to facilitate this transition towards renewable energy. They've got significant renewable energy supply as well, which means that you can bring down the embodied energy to actually produce and extract the lithium. So of course, that's going to be important for manufacturers when they want to secure a greener type of lithium for their supply chains. Along with that as well, of course, Quebec is located in close proximity to the rest of the North American supply chains. This is going to reduce logistics costs and time, and this is very, very important and is going to grow in importance moving forward. And so as mentioned, Sayona Mining have got Fortier Lithium project as their flagship project. They've got Tanzim as a potential further exploration moving forward. And of course, they've recently acquired NAL. This is all located within the Abitibi hub that they've been developing. It's a key lithium hub that they're hoping to continue to expand and grow and also provide downstream processing moving forward. But now Moblum is located slightly to the north. However, it further expands their footprint within Canada. You can also see there that they've got a range of tenements in Pilbara and Western Australia as well, which opens up further exploration opportunities moving forward for ASX SYA. As we explore the video, we'd love to hear your thoughts on it all, so drop in a comment below what you think about Sayona, Z1P as well as Imugene, and drop in a comment what you've got on your watch list for the month of October up ahead. And so as mentioned, Sayona Mining earlier this year completed the acquisition for NAL, North American Lithium. They were able to bring in a range of new facilities, they got a great price for it, they're able to help to integrate these in with their hub that they're developing within their current location. Of course, it's a fascinating scale that they're hoping to achieve, and as you can see here, this helps to support Sayona's plans for a world-scale Abitibi lithium hub. Eventually, they're looking to provide the opportunity for downstream processing as well to really build out and capture value throughout the supply chain. And this announcement recently came through for Sayona, which stated that they're looking at potential NAL resource increase. We know the tailwinds behind the lithium sector. We know the EV adoption is starting to pick up pace. Of course, over the past few years, there hasn't been a lot of projects coming online because we only recently got the price signal for lithium that it started to uplift at the back and middle of 2020. As a result of that, we're heading into a supply shortfall period for lithium, and so producers and developers are looking to bring on their product as fast as possible to help to feed into this supply shortfall. And this is the reason why there's so much excitement surrounding the NAL resource increase possibilities for Sayona Mining. And then building on top of all of that, Sayona recently announced that they'll be acquiring the Moblum project. As you can see here, they've got an agreement to acquire a 60% stake for around $86.5 million US dollars. It's a tier 1 deposit. We know that the spodumene deposits in Canada, particularly within Quebec, are world class, and this is another deposit that helps to feed into that. It's located in an established mining jurisdiction. As mentioned, it's not within Abitibi, however, it's just towards the north, and so it helps to build out that North American footprint for Sayona Mining. Still helps them to cement that leadership position, and of course, ultimately helps to feed into the supply chain for many of the manufacturers and factories that are going to come online over this next decade and beyond to help to drive not only this EV adoption, but the need for lithium-ion batteries across the world. And so on to stock number 2, Zipco. I'm sure by now everyone's familiar with the ASX Z1P story. Zipco is one of the leading ASX BNPL, buy now pay later providers, and over this past period they've really focused on expanding their global footprint, taking little stakes in a range of different geographies for BNPL providers that can hopefully grow Zipco into a leading global player. There's a lot of excitement over this past period about some of the announcements that they released. Of course, this is on the back of their FY21 results that came out as well, which showed significant growth, particularly within their QuadPay acquisition in the United States. And they're hoping some more of these strategic stakes that they're taking can follow in the QuadPay footsteps. This is, of course, layered on top of the fact that Zipco also recently had a brand refresh. As you can see here, the new logo in the top left corner for Zipco. And of course, there is this focus of bringing everything under the global Zipco banner and really becoming this global leading provider for BNPL as mentioned. And so this was one of the recent announcements that really attracted attention for ASX Z1P. They announced that they'd be looking to make a strategic investment into Zest Money, a leading Indian BNPL operator. It follows the same type of trajectory that they've taken with some of their other acquisitions like Spotty and Twisto, where they're taking a small strategic stake initially, looking for those synergies, looking to integrate the systems together, and then potentially further down the line, look to take a bigger stake and really take control of these types of companies. There are a range of different factors contributing to Zipco's interest in the Indian BNPL market. Of course, we know that there's significant tailwinds behind many of these emerging markets, such as low usage at the moment, low levels of penetration for e-commerce, as well as a range of digital payment services, low levels of credit overall as well. However, this is coupled with the fact that there is an emerging middle class that's only going to continue to grow. India as well has got a relatively younger demographic, and this is the type of demographic that's far more likely to adopt buy now, pay later, especially in place of, say, the current incumbent credit cards. There is also the notion as well that in emerging markets, you can often skip over current technologies and look to move towards next generation technologies. And so this is some of the rationale behind Zipco's stake into Zest Money, that at the moment there's not been a huge adoption of current forms of credit, such as credit cards, but the possibility as many of these individual users come online, the digitization starts to pick up pace and the middle class continues to emerge, that they may be looking for forms of credit as ways to empower their own financial decisions. And Zipco and Zest Money are hoping to feed into this with their buy now, pay later offerings. And this, of course, only further builds on Zipco's earlier Spotty and Twisto acquisitions. They closed earlier this year, providing access to both the Middle East and the European markets. It continues to follow in this footsteps, and they've continued to take a range of different stakes as well in different regions around the world. Zipco has tried to go as far as possible, as quickly as possible. They recently raised $400 million earlier this year through a convertible note offering, and it means they are well capitalized to continue to scale, as we do know the buy now, pay later space is quite a land grab in this earlier stage. And just having a look at the ASX Z1P footprint, of course, I've got a mature offering in the ANZ market. The US market continues to grow with their QuadPay acquisition being a real star and standout. The UK market is where they're looking to continue to grow that footprint. And then here you can see a range of different spaces that they continue to expand into. They're well capitalized. They've got a global brand now, all under the one Zipco banner. And of course, I've got a global team that looks to continue to leverage the opportunity that they have with their technology and their software to see how they can scale as fast as possible. Of course, we're all familiar with the increasing competitive landscape in the buy now, pay later space. We've heard about Apple, we've heard about PayPal. We know that it's continuing to get hotter and hotter in the space as new entrants look to take their piece of the pie. And so the current focus for the incumbents at the moment is to expand as rapidly as possible into new geographies to grow that footprint, while also looking to continue to differentiate their offering as well, to be able to stand out in a crowded landscape. And so this recent piece of news really attracted ASX BNPL investor interest in Zipco. Zipco announced that they'd entered an agreement to integrate Zip technology into the shopping experience with Microsoft Edge. Of course, Microsoft Edge is one of the leading browsers around the world. Many people are familiar with Chrome and Firefox. Of course, Microsoft Edge is Microsoft's offering. Interestingly, this is bundled with many of the Windows laptops that come. So it's got quite a significant early stage exposure to many of these types of companies. This follows, of course, a firm recently announcing an agreement with Amazon. It's a major validation of the technology. Microsoft is a huge player, one of the top 3 companies by market cap on the US market, so everybody knows about their scale. It'll be interesting to see how this integration goes playing out. As stated, initially it will be in the US markets and they'll look to come online as early as the back end of this year in 2021. But of course, it has the opportunity to continue to scale and expand into new geographies if successful. And it really does help to validate the zip code technology and offering that a global player like this is interested in the space. And then on to Imugene. ASX IMU is a company playing in the immunotherapy space that has had a significant uplift over this past period. There's been a huge amount of attention to Imugene. They've got a stacked pipeline, as you can see here, that continues to grow. And over the past couple of months, I've brought out a range of new data points, as well as a range of new insights about where they're heading from here moving forward. When you have a look at the pipeline, or the dance card, as the Imugene CEO Leslie Chong likes to refer to it as, you can see onCARlytics, which is often referred to as a potential holy grail for cancer treatment around the world, with that universality of treatment if successful. It's in the preclinical stage, but the early discussions with the Celularity strategic partnership could be about how they can leverage onCARlytics with the offering that Celularity is starting to develop as well. We know that for CheckVac, the FDA provided approvals for a phase 1 trial, so that's starting to attract a lot of attention on that stage. And Imugene have provided some updates and data points both for HER-Vaxx as well as PD1-Vaxx, which we'll discuss later on in this video. We'd love to know your thoughts on it all, so drop in a comment below what you think about Imugene or any of the other companies that we've mentioned in today's video, and let us know what's on your watch list for the month of October moving forward. And so here's one of the recent significant announcements that ASX IMU brought to market. This had to do with HER-Vaxx, the most clinically advanced treatment that Imugene have. It's currently undergoing a phase 2 trial, and they brought out some more data points surrounding it. Of course, ASX IMU have released some of these initial numbers. You can read it in their full announcement on their website. However, one of the big standouts is that currently with this treatment, they saw that there was no difference in safety between the 2 treatment arms, showing that HER-Vaxx does not add any additional toxicity to the standard of care chemotherapy. This, of course, is significant. And however, further detailed safety analysis will be conducted once the trial is completed. We know that Imugene is currently awaiting the events necessary for overall survival evaluation. This could come up in the upcoming period. Investors are looking forward to watching to see how this plays out. Of course, once this is packaged together, the data is cleaned and then analysed, will be presented in its final form, which will include final overall survival, progression-free survival, as well as safety and immune responses. And this will go some way to being able to provide the de-risking and the awareness about what HER-Vaxx can actually provide as a treatment. And of course, it could have the potential of attracting big pharma interest as well once this data comes to market. This builds on the fact that Imugene recently announced that they've secured patent approvals as well for HER-Vaxx in the Japanese market. It's a massive global market, but most significantly as well, gastric cancer is hugely clustered within the Asian region. And so being able to provide a treatment such as HER-Vaxx into this market, if successful and if it does come through to market, is significant. We also do know of the fact as well that at the moment, many of the current treatments and standard of care, their patents are looking to expire over this next decade. So there's going to be new treatments that are necessary to treat people experiencing these illnesses around the world. So Imugene are hoping that some of their solutions that they're in development for can help to feed into this opportunity. And so building on this as well, Imugene recently provided an update surrounding their PD1-Vaxx. PD1-Vaxx is in phase 1 clinical trial. They've commenced dosing for the 3rd cohort of their phase 1 trial, 3 individual patients, and barring any unforeseen clinical observations, they're hoping to get ratification of the optimal dosage. Of course, we know that phase 1 trials are looking for safety as well as optimal dosing, and they're hoping to get this ratification in early October. So it's upcoming soon, and ASX investors will be watching to see what comes out of this. Of course, pending success at PD1-Vaxx of phase 1, investors will be watching for the opportunity to continue to see PD1-Vaxx go through to phase 2 as well. And building on both of these pieces of news, Imugene announced as well that they'd be running 3 further trials for HER-Vaxx and seeing how they would be pairing and working in conjunction with PD1 and PDL1 checkpoint inhibitors. It's a stacked pipeline. There's, of course, a lot of potential announcements and news flow up ahead for ASX IMU, both for PD1-Vaxx as well as for HER-Vaxx, and of course on the onCARlytics and the oncolytic virus front as well. And so this was a recent piece of news as well. Imugene announced a strategic partnership with Celularity. This, of course, has to do with Imugene's onCARlytics. We recently interviewed the Imugene CEO and Managing Director Leslie Chong, where we discussed this strategic partnership with Celularity, as well as the capital raise, which was around this time, and what it could mean for the pathway up ahead for ASX IMU. This is significant because we know that onCARlytics has to pair with a CAR-T. Of course, once you can signal for CD19 in solid tumours, the CAR-T can then go in and hope to destroy these treatments. It's still in the preclinical phase, but Imugene and Celularity are looking to move towards some further development of treatments and trials over this next period. If successful in the lab and they can move these trials towards humans and it can show any type of similar type of response or any type of similar reaction, it has the opportunity to be a blockbuster announcement. So it'll be very, very exciting to see what the next couple of years looks like, both for Imugene on the onCARlytics front, as well as what can come out of this partnership as well. Particularly because Celularity have developed an allogeneic CAR T. This means that it's off the shelf and it's placenta-based. And of course, this really helps with scale as well as with consistency of treatment. And it could be a fascinating partnership if you think about the opportunity to continue to scale this, if successful, globally, and to be able to really improve the standard of care for people experiencing and suffering from cancer around the world to really make a tangible difference for many lives. And so finally, on top of all of that, ASX IMU were recently entered into the ASX 300 on the back of the ASX index rebalances. We know these happen quarterly. Imugene's market cap is now over $2.5 billion. They recently raised over $90 million at around 30 cents, but their share price is pushing towards their all-time highs back at the 50-cent mark now. There's been a lot of investor interest for ASX IMU. We know that there's a lot of buying available and mandates open up as well for companies that enter into the ASX 300 and are starting to get onto the radar of more and more institutions. It'll be fascinating to see where it plays out. The market cap is rising so rapidly that eventually they could be eligible for ASX 200 in the next couple of rebalances if the scale continues to increase. It's a fascinating period for each of these three companies. If you did enjoy the video, don't forget to give it a thumbs up. Feel free to share it out. As mentioned, we make daily videos, so don't forget to subscribe if you're new here and turn your bell notifications on so you won't miss any of our daily episodes. Drop in a comment what your thoughts are on each of these companies. And just a reminder that I'm not a financial advisor. Nothing we discuss is financial advice. The stocks we cover, these are definitely not buy recommendations. It's just three interesting companies that have had big past months in September that we'll be looking forward to watching how they trade in the month of October up ahead. Thank you so much for joining us. For now, stay well and happy investing.